And the thing is, like, we have the benefit of Monday morning quarterbacking, right? And I was very critical of Powell in 2022, thinking, like, why does he feel like he needs to do what he's doing? I still remember when Jim Bullard even made a comment like, hey, we may raise rates by 0.75%. We've done it in the past and the world didn't end. I'm like, geez, if that's your reference point, setting that low bar, and then they do it 4 consecutive times, you kind of felt like, what was your hurry? But I think in recognition of their misunderstanding of the non-transitory nature of the inflationary impact, they felt the catch-up they needed to do. They needed to do the catch-up that they did, and I would say it's been arguably pretty effective from that point forward.
Hey, Doug, we're just getting a few, earnings trickling out as we're pretty much done. We're waiting on Nike, and we'll break them as soon as they cross. But we just did, FedEx, which we're seeing this stock rally big time, up about 11% here in the aftermarket. As Tim rightly pointed out, they're authorizing a new $5 billion share buyback program. When companies are continuing to spend on buybacks, how do you read that as an investor? Is that really, I get why the stock goes up, right? You buy back shares, I get the math, the supply that's out there and what that means, earnings per share. But as an investor, does that make FedEx more interesting to you because of that? Or do you question, all right, is that really, if they think that's the best use of $5 billion versus something else, I don't know. How do you read that as an investor?
Yeah, it's funny, Carol, because I'll answer the question in sort of the context of sort of the opposite perspective. When insiders sell stock, right, we always say there are a lot of reasons that they do that. Mm-hmm. But one of them is not because they think the stock is going to go on some parabolic rip higher. When companies buy their stock back, there are a lot of reasons to do that. There's financial engineering, to your point, on a metric per share basis that improves the valuation. But they're not doing it because they think the stock is overvalued. So I do think it is a nice signal to Wall Street and to the investor community that they still think there are better days in front of the company, and that's a good use of the free cash flow that they're generating.
There's something else you mentioned, though, just now, Doug, and that's the idea of executives selling shares. And we've seen a lot of executives lately sell shares. We're getting Nike earnings right now, so I do want to just jump in with some numbers. Third quarter revenue for Nike did meet estimates. Third quarter revenue coming in at $12.43 billion, estimates for $12.31 billion. Inventory coming in lighter than estimated at $7.73 billion, estimates for $8.16 billion. Gross margin coming in just shy of estimates too, Carol, 44.8%, estimates for 45.1%, and then earnings per share coming in shy of estimates at 77 cents versus 79 cents.
Yeah, we're looking at Nike shares up almost 5% here in the after hours. That third quarter revenue number, folks, it's a beat, $12.43 billion, as Tim mentioned, estimate $12.31 billion. And what's interesting is the gross China, or China revenue in particular, and that came in just a hair above the forecast at $2.08 billion versus $2.04 billion. A very important market. We track it. We talk about it a lot. So interesting to see that number come in and important. But right now, I got to say, actually, Nike bouncing around. It was rallying in the after hours. We're now down about 1%. The inventory number, 7.73 versus an estimate of 8.16. So continue to kind of go through those numbers.
Some interesting commentary from John Donahoe, the president and CEO of Nike, who says, quote, "We're making the necessary adjustments to drive Nike's next chapter of growth. We're encouraged by the progress we've seen as we build a multi-year cycle of new innovation, sharpen our brand storytelling, and work with our wholesale partners to elevate and grow the marketplace."
All right, right now, folks, Nike shares down just about 1% here. It's bouncing around here, but down about 1% here in the aftermarket. Hey, just to wrap up, I want to go back to you, Doug Kavar, of course, still with us. Hey, Doug, Doug Sioka. Sorry about that. Although it's a name in the family, I know I can do that.
That's right. Prominent one.
Just thinking of Mom. Hey, listen, so how are you thinking about, we just had a guest, Cheryl Smith, who said, hey, listen, don't forget, recessions start 23 months after interest rate hikes begin. The range is from 15 to 36 months. We're now at 24 months. Do you think about that maybe we've got to see some kind of correction, or that we are maybe at some point going to hit that recession, maybe sooner rather than later?
It's a very natural part of the business cycle, obviously. For us, it's difficult to anticipate or predict a specific time only in so much as we have such strong underlying economic growth right now. And I think if you pair that economic growth with companies that are a very interesting part of their upswing of their profit cycle, plus a labor market that's finally in balance, and think about it too, like the breadth that we see in the contribution to the index performance is really huge. If you guys mentioned regarding Nike, incorporating like EM, like China, which is a huge market, and in light of like everything that happened with this Apple computer today, where's Tim Cook? He's in China, right? Opening the second largest Apple store in the world after the one on Fifth Avenue, right? This is a market that has actually been discounted in its contributions to American consumer products and technological goods. If that comes in, I think it actually forestalls that recessionary influence even more.
It's a really good point. We talk about that too, that despite all the pushback, or at least the tensions between the U.S. and China specifically, you're not seeing executives run away from China. All right, Doug Sioka, thank you so much. Great to check in with you. Chief Executive Officer, partner, as well at Cove Capital Partners, roughly about $1.25 billion in assets under management, joining us from Leawood, Kansas. Nike shares now back up, Tim, up about 4% here.
Yeah, third quarter revenue coming in above estimates at $12.43 billion. Third quarter inventory coming in shy of estimates at $7.73 billion. Also coming in shy of estimates is third quarter gross margin. 44.8% estimates were for 45.1%. And then Greater China revenue coming in above estimates at $2.08 billion versus estimates of $2.04 billion. One more there for you, Carol.
Yeah,
earnings per share coming in at 70 cents per share. That is shy about 2 cents of the 79 cents.
All right, a lot of numbers.
That was year over year, I should say.
You know who makes sense of all these numbers for us?
I do. We have a brilliant team over at Bloomberg Intelligence.
Yeah, and right now joining us is the BI Senior Analyst for E-commerce, Athleisure, Off-Price Retail, Poonam Goyal, joining us from New Jersey. Hey, so Poonam, stock's been bouncing around. It rallied, then it went lower. It's right now up about 3%, forgive me, 3% Nike shares. What jumps out here for this quarter? Is it a good one?
It's a good one. It's a good one because North America sales are up 3%. And I think that's really impressive here because none of us probably expected North America to turn so sharply. In fact, everything that we've been hearing in the retail space, especially from even rivals, Adidas, whom I reported earlier, was that North America was still a challenged market. So to see this growth, I think, is what has investors be optimistic because it truly, I wouldn't have expected this going into the quarter.
Yeah, I'm going to just rehash North American revenue, $5.07 billion. That's up 3.2% year over year. The estimate was $4.82 billion. That is a pretty hearty beat. Greater China revenue, we always go to China. This came in, Poonam at $2.08 billion, up 4.5% year over year. Estimate was $2.04 billion. Who says Chinese consumers aren't shopping? But put this number in context because you have watched it for a long time.
So the number that you just reported was the reported number, but in constant currency, sales in China were actually up 6%, and they were a little shy of consensus, which was looking for 6.4%. So I'd say on an apples-to-apples basis, looking at the underlying trends in the economy, it was a tad bit weaker. So I would still remain guarded on what happens in China. We heard from our colleagues in Europe who covered the luxury space, with Gucci reporting earlier, that there are some headwinds that we need to watch for in China. So I'm still on the sidelines when it comes to China, but really particularly impressed with the North Americans this year again.
It's so interesting that you say that because I pull up FAGO on the Bloomberg terminal, and I see that Greater China back in 2021 accounted for 18.6% of Nike's sales. Then in 22, it was down to 16.2%. Then in 23, down to 14.2%. Over that period of time, North American revenue has increased. What should we think about as sort of the share? Like, where are we going to see the growth, Poonam, geographically for Nike?
I think the longer-term growth story is still intact, and China remains a key growth engine. The period that you were just discussing is a lot influenced by the pandemic, so I don't think it's the norm to look at. I do think there's a lot of growth available to Nike and all the athleisure brands in China, so it's still a growth story in the long run. In the near term, though, we will have challenges, or at least that's what we're seeing. And I wouldn't be surprised if China at some point would be 20% of sales again or near that.
Hey, there was another story unrelated to earnings, but Nike replacing Adidas as the main uniform sponsor of Germany's national football team, so taking the competition for marketing primacy in the sport onto its arch rival's home turf. So it's just, we see this go back and forth, right? They're all competing to have their name and outfit, various sports teams around the world. How important are these sports partnerships, Poonam, in terms of kind of, fueling consumer sales ultimately? How important are things like this?
They're very important, especially in sports world. So Nike has actually, over the past few years, taken a lot of sponsorships from Adidas. We did expect that to change a little with the new CEO in place at Adidas, and they are winning back some teams. But the fact that Nike is able to take over the German soccer team, or the German team, I should say, is impressive, because we know Nike dominates in basketball, but to be able to take share in sports that is really not a dominant force then is only going to help it attract more share, because the sports teams matter. They are endorsers for the brand.
Hey, Poonam, before we let you go, we got to talk about Lululemon. Shares down more than 9%. The company offered a lower than expected sales outlook for the first quarter and the full year. The company sees net revenue in the range of $10.7 to $10.8 billion. What are your initial thoughts with what's going on at Lululemon and why the decline today?
So the decline is all in the guidance, as you said, but if you think about how Lululemon typically guides, anytime they're very conservative. I wouldn't be surprised if they're conservative again. They're known to set the bar low and beat it. And 4Q results were good. So if that has any proof on what's happening at the brand, I think the brand still has momentum. They'll continue to execute against their Power 3 x 2 strategy. These guidance numbers, we think, could prove to be conservative as the year unfolds.
All right, interesting stuff. Hey, listen, we so appreciate it. As always, Poonam Goyal, she is Senior Analyst for E-commerce, Athleisure, Off-Price Retail at Bloomberg Intelligence, joining us there from New Jersey. All right, let's get a reminder of how we wrapped up on this Thursday trading session and some of the news after the bell. Let's head on over once again to Charlie Pellet.
Much indeed. An update today for the Dow, the S&P, NASDAQ Composite Index all moved higher, not just advancing today, but also the 20th record of the year for the S&P 500 Index. More on the numbers in just a moment. Do want to continue with earnings because we had another major beat after the close of trading. FedEx out with adjusted EPS for the third quarter that did beat the average analyst estimate. After ours, we got FedEx shares surging by 10%. Nike, a company Poonam was just talking about, Nike after earnings. We do have Nike up now by 2%. Third quarter revenue, $12.43 billion estimates there, $12.31 billion. And Lululemon Athletica plunging after ours, down 9%. Lulu offering a lower than expected sales outlook for the first quarter and full year, driving shares down in extended trading. Again, after ours, we got Lululemon down now by just about 9%. An update on Wall Street, the Dow, the S&P, NASDAQ all advancing today. The S&P 500 Index up 16, up 0.3%. Dow Industrials up 269, up 0.7%. NASDAQ up 32, a gain there of just about 0.2%. 10-year 4.26%, the 2-year 4.64%, and spot gold today. We did have gold lower, a little change, down 0.2%. West Texas Intermediate down 0.5, and Bitcoin down today by 2.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Carol, we've all been there. A moment where you want to say something, where you want to speak up, where you want to be heard, but instead, for a whole host of reasons, you just stay quiet.
I did it for a long time. I was so quiet and so actually shy, if you will. Hard to believe.
I wasn't going to say anything.
It's okay.
You said it yourself.
I did.
It turns out, though, that keeping quiet in those moments can, according to our next guest, really hold us back in life. I'm not just talking personally, but also professionally, too.
Interesting. All right. Elaine Lynn Herring is a lecturer at Harvard Law School. She's worked with corporations, government organizations, NGOs, including American Express, Google, Nike, Pixar, the Red Cross, and many more. She, Tim, has a new book out.
Yeah, it's called Unlearning Silence, How to Speak Your Mind, Unleash Talent, and Live More Fully. She joins us from the San Francisco Bay Area. It's good to have you with us, Elaine. How are you?
I'm good, and I'm so glad to hear that Carol's already spilling the tea about her life.
I know. Well, you do that a lot in your book, actually. You open with this